Hey guys, John Stevenson, Guaranteed Retirement Guy. Um, this is my first time doing a live and it's kind of late at night, so I don't think anyone's going to be here, but I figured I'd just test this out and see how it goes. Um, so I've had a few people ask me, "Hey John." So I've had a few people ask me, "Hey John." So Oops, got a little feedback there on my phone. Yeah, I'm still figuring this out, as you can tell. I'm used to doing videos, recording them, putting them up. But you know what? A lot of people want their questions answered right now. So I figured I'd come out right now and this evening and answer any questions that any of you have. Um, so I've had people ask me, "Hey John, how long have you been doing this? What got you into selling annuities, that sort of thing?" And I'll tell you a little bit about myself. I actually started about 21 years ago in 2002, and I'll be honest, I got in for the money, but things changed, and I started thinking, hey, you know what? This is actually doing people some good, and there were a lot of companies that were were available, but my current broker wanted us just to sell one annuity, which I didn't know any better. One annuity from one company. And I didn't know any better. I mean, I was in my early 20s, 21, 22, and I didn't know any better. And I would recommend it. It was a great company, A-rated company, but I'm sure there were others out there at the time that would pay in more. I just didn't know about it. And there's a lot of agents out there that don't know about the different annuities out there and their payouts, and which is unfortunate. And sometimes they do know about it, and they won't tell their clients about it, which is, for me, it's a disservice. You're not doing really. Um, you're not you're not you're not serving people the best way that you can by limiting um, what you can provide. I mean, if there's an annuity out there that pays $50,000 a year and you're selling something that's $35,000 a year, it's your clients aren't going to be very happy with you when they find that out. So anyway, so I started that 20 years ago, and it was a good time. I went to Arizona. I was all over Las Vegas and meeting people and helping them with their retirement. And then, of course, I was not in it very long. I actually went out and started some other businesses, and I had some window cleaning companies, started coaching other companies around the nation. So I became a business coach, and that was a lot of fun. Had a pretty large window cleaning operation in Vegas. I had a lot of employees and did very well, but I missed being able to help people individually with retirement. So here I am. Anyways, been doing this for a couple years already, being back into it and been able to help a lot of people. I think one of the biggest things when people come to me is they're usually talking to an advisor, and advisor's telling them, hey, I've got this annuity. It's a great annuity, and it could be with any number of companies. F&G's an example. Allianz is another one. Great companies, and they do make sense in certain situations. So it just depends on what you're looking for. But I love, and if you've watched any of my videos, you notice that I love showing everything that's on the market. Because if it was my money and I was thinking, hey, I want to invest 200 or 300 grand and I want as much income as possible, boy, I sure wouldn't want that agent to be just showing him what's going to make him the most commission. I'd rather him show me everything that's available on the market. Otherwise, I don't know. Otherwise, I wouldn't be very happy when I found out, hey, I gave up my 300 grand for, four or $500,000 less in income during my life. So, hey, Christian, thanks for tuning in. Any of you guys got questions, go ahead and put them in the chat box. But I just want to kind of get on here and kind of just talk a little bit. And it's been fun to meet a lot of you. A lot of you have watched my channel and you've tuned in, and I really appreciate it. You've subscribed. I appreciate that too. And a lot of you have reached out, and I've been able to help you with some of your retirement planning, which I'm super grateful for as well. It's been a lot of fun. And I've been able to meet a lot of great people. So anyways, I am right now working on something that we'll be launching here soon. Um, and we're going to be able to provide clients even more services, um, and be able to help a lot of agents as well, serve their clients in a more holistic way. And so I'm looking forward to sharing that. I'll probably share that in the next 30 days. Once it's actually launched, I'll let you know what it is. Um, but right now, it's kind of kept under wraps until it actually goes live. So, but anyways, I wanted to just kind of get on here and talk a little bit. Of course, if there's anyone that sees this and they want to comment below, feel free. Happy to answer your questions, and I'll probably schedule these more, and maybe look at some different topics, see what kind of topics you guys want to go over. A lot of times people reach out and they're like, "Hey, how does the income rider work? What exactly am I getting when I'm paying this fee? How much income can I get without the rider? Um, can it really protect my money against market crashes?" Just there's a lot of different things to think about. Um, Christian says, "Hey, I'm pretty big on metals and their value increased by a lot. By liquidating them seems difficult. Can I use them in annuities?" Good question, Christian. No, you cannot. So, um, I like precious metals. I like gold, silver, platinum. I think that's fun. It's nice to be able to have something that kind of diversifies your portfolio. But annuities just have indexes. It's not as flashy as your brokerage account or an IRA that can hold different things like gold and platinum. But the cool thing is the insurance company is giving you a lot of growth because they're purchasing options. If you know anything about options contracts, I think they're kind of sexy because you're able to buy these option contracts and be able to leverage an index, whether it be a stock or a whole index, and you could buy options. And if that index rises, depending on how long it takes for that option to expire, maybe you got an option that expires in a week, maybe it's for a year. But the nice thing is when the market is going up, your option, of course, is going up in value. And at some point in the future, if it gets to a point where you want to exercise it, you can exercise that option and make a ton of money. And that's what insurance companies do. That's what they're doing when you've got your money in these fixed index annuities. They are buying options, and with the S&P, for instance, if they buy options with that, the S&P goes up. They're going to exercise those options, and you're going to get a nice credit in your account. So some good growth there, and of course, that's how the insurance company makes their money too. But yeah, it's definitely not gold or silver or anything like that. They will invest in global indexes, and some of them are actually AI indexes, which are kind of cool. But I haven't seen anything with precious metals. Okay, so I can't use them to fund. No, you can't. Sorry. No, annuities are not, set up to do that. They're more for guarantees. They're not like our trading accounts, like our day trading accounts, our brokerage accounts, where we can kind of buy and sell through them. No, you can't do that with annuities. You just got indexes, and you're investing in indexes. And you can change those indexes usually once a year. Sometimes you could change them more often. Sometimes you can switch them up. It just depends on when that actual index crediting happens. So if it's a 1 year, if it's a 2 year, 3 year, it really just depends. So yeah, but that's what I like about those is it's really cut and dry. And right now we've got indexes that are giving you 300 and 400% on the participation, which is insane. Because, well, think about it. If you've got an index and it's the S&P, and let's say the S&P this year goes up 10%, and let's say they're giving you a 300% participation rate, they're going to credit your account 30%. Now, don't get too excited. They'll probably change that, or they usually on the renewal they will switch what it's actually making. So they'll change it. Maybe the participation rate will be at 300%, and maybe they'll change it to 100% or 150. If the option prices are super expensive, they might go down to like 60% participation rate, or maybe they'll just cap your earnings and they'll put it at a 10% cap. And if it makes 15%, you're still capped at 10%. So, but that's why it's so important to look at indexes where if you can get an index where you can lock in that participation rate for a longer period, like Mass Mutual has one where you can lock it in for 7 years. That is something that will give you a lot of growth, and it'll lock in those caps or those participation rates for a lot longer, which is nice. I actually had a guy call me yesterday, and he had an agent was showing him a F&G. It was just a growth annuity. It wasn't for income, but the problem was that agent was showing him a 350% participation, which is true. I mean, it's really getting that. The problem was he was showing him, here's what you're going to get over the next 2 years, and then your income from 150,000 is going to be $2,000 a month, which is way too high for $150,000 when you're activating income in 2 months or 2 years. So then that same agent showed him a growth annuity that was going to grow to 1.2 million in 20 years from $100,000. And then it was showing these insane returns, like 50% returns some years. And I think it was just doing that just because the participation rate is he was assuming that the participation rate was going to be there for the next 20 years, which it doesn't. It resets. And so you got these agents that'll do that, and they'll make you feel really good and excited. And then 2 or 3 years later, when the index participation rate or the caps change, then you're frustrated at your agent because your agent sold you something based off of the promise that those par rates are going to stay where they are, and they're not going to. So, anyways, all right. Well, tomorrow, if you guys have questions, reach out to me. I do have a pretty full schedule tomorrow, but if you got questions about certain annuities, you're wondering what income rates are. Income rates are really high right now. They just are. I mean, rates are high, incomes are high, and if you can lock that in, you should do it. I mean, I know the market's going up, and it's great to be in the market, and it's fun, and I like being in the market too. But you need to have some guarantees. Okay, the market could. You never know what could happen on the other side of the world that could cause a flash crash, and all of a sudden you've lost 30 or 40% of your account. And then you got people reeling, frustrated, and then they reach out to me and say, "Hey, I wish I would have done this earlier." So there's nothing wrong with leaving your money in the market, but you should use a portion of it for at least some guarantees, especially when you're at or near retirement. So it's just the smart way to do it. Most of us aren't smart when the market's going up, though. We get greedy and we leave everything in, and we think everything's going to go great. The problem is a lot of times the market will catch us by surprise and cause problems that we were hoping that we would just be able to time the market, time ourselves out of the market, which is not going to work. So anyways, yeah, if you've got questions, reach out. MYGA rates are high too right now. Some of them are paying 5 and 6%, just depends on what you're looking for. Those rates have been going down, so they'll probably go down here the next couple of weeks is what I'm guessing. So Thursday and Friday, I'm not going to be available. I'm going to be skiing, and I'm going to go to Heavenly Ski Resort, which is right above my house. I mean, I live right by Lake Tahoe, so I'm going to take my son skiing. Actually, probably what we'll do is we'll snowboard, and then I'll ski the next day over at Palisades, which is on the other side of the lake, more towards Sacramento. So Palisades used to be called Squaw Valley, and it's got I think I got 2 mountains, so it's 6,000 skiable acres, so it's pretty big. If you guys watched my video, I did a video a couple weeks ago about skiing and annuities. You should definitely watch it. I love powder skiing, and powder skiing to me is super fun. Fluffy snow kind of reminds me of annuities. You got safety, you got fun, you got growth, as opposed to going down a groomed run The groomed one is nice and fast and hard. The problem is when you fall super hard and it hurts really bad. It's kind of like the stock market. You go really fast. It's really fun. It's very thrilling when things are going well. But if you crash, that a groomed run is hard pack. And when you fall, it hurts and you get injured. So that's how it is being in the stock market. You're in the stock market, it's fun, but when you fall, it's going to hurt really bad. So that's why I always recommend having some safety so that when it does fall, at least your income is covered. All right, Christian. So, what is a successful strategy for a young family that won't retire in the next 35 years? I've only been skiing in Bavaria. Sorry, I'm missing something. Those steep black tracks are scary. Yeah, they are, and it's not scary though when it's fluffy. If it's fluffy, like when I wreck, I like wrecking on a snowboard when it's fluffy. That's like the best place to wreck because when you wreck on a snowboard, you start flipping in like on a pillow, and you almost are like somersaulting, and then you can kind of time yourself and you can land on your board and keep going. The difference between that and skis is one leg's going that way and one leg's going this way, and you twist your knees and you can mess up your meniscus pretty bad. Successful strategy for a young family. Personally, and I just tell you this because I have studied securities a lot. In fact, I was gonna manage money, and I just don't want the call that when the market's down, I don't want the call from someone saying, "Hey, I lost 30%. Can I retire?" That's why I'm in the guarantees. But since you're young and you're looking at growing your wealth, then I love indexes, like cheap indexes, Vanguard, Fidelity. Personally, I like those because they're cheap fees. You can throw money in, you can grow your wealth, and you don't have to pay an advisor 1 or 1.5% to do that for you. I like healthcare stocks, especially when you're young, because healthcare over the last 30 years has gained around 16% average annual growth compared to 8% that the stock market's done. So if you're looking to maximize growth, I like that. Has a lot bigger ups and downs, but it doesn't matter when you're young. Who cares? When the market's down, just throw more money in there and dollar cost average it in and compound your earnings. So, and I met with a guy today, and he's like, "Yeah, I'm really aggressive. I really like being in the stock market, but I know I shouldn't be because I'm like he's in his 60s, but he likes it, and I totally respect people, and there's nothing wrong with that. The problem is boy, when that market comes down, man, it can really mess you over when you're in retirement or you're right next to retirement. I mean, we had people doing that in 2007, and they thought they were on the top of the world, and they were about to retire, and their account balance went like way down with that crash. They had to wait like 5 to 6 years just to retire. So I guess you have to ask yourself, is it worth it for you to take the risk when you're retired to keep all your money in the stock market because you're greedy, right? That's really the thing is when people have all their money in the stock market when they're retired, it's because they're greedy. They're hoping that it's going to grow. They're hoping that, and I have no problem with growth. I think it's good to have it. But when you have all of it subject to 100% risk, especially if you're married and your spouse is not as savvy as you, I think that could be irresponsible because you might be really good at investing and managing your money, but what if your wife isn't? Like my wife, she doesn't do that. Like she looks to me for all the investing. And so if I was to leave all the money in stocks in the stock market when I was 60 or 65, and all of a sudden I died and then the market went down to her, she would have no idea what to do. And I would just put her in a bad spot. She'd be super stressed out, frustrated. And so you can't just think about yourself. You have to think about those around you. Yes, you might be savvy, and yes, you might be able to control it all. You can certainly buy a bunch of stocks long, and then you can hedge it with options. You can always buy put options. Okay, let's say you're in Microsoft, you could buy put options, and that's going to protect you, obviously. But that's the thing is, is a lot of people aren't savvy enough to do that and time it and to get the options at the right prices. It's just a lot of work. And if you're retired, why are you doing that in the first place? Okay, if you're retired, it's fun. It's fun to be in the market. It's fun investing. But I love hiking and I love skiing and I want to travel and I don't want to be staring at the screen all the time. I don't want to be trying to see, all right, do I need to get out of this trade? Do I need to get into this trade? What about this report that came out? Forget that. If you're retired, go enjoy retirement. Okay. You've lived a long time. You've enjoyed your working years and you've had your growth. Go out and enjoy it a little bit. That's why you've got people like Babe Ruth and you've got Shaquille O'Neal, super rich guys. They still bought annuities because they knew at one point they could lose it all, or they knew at one point that they wouldn't be working and they wanted to have some sort of stream of income, because to them having that peace of mind was more important than always speculating and always being in the market and always trying to time everything. And nothing wrong with that, but just don't do it with all your money. Do it with some of it. So, Christian, I would say, back to your question, is, I mean, if I was in your spot, I mean, this is just me. It's not investment advice. Okay. I would probably put all my money in like healthcare stocks and low cost index funds. And then I would start buying annuities probably when I turn 40. And I would just start stacking my pension, because that's what you're doing with an annuity. You're stacking your pension. So I might spend $100,000 knowing I'm going to stack my income by, I don't know, $15,000, $20,000 a year. And I just keep stacking it. It probably more than that, depending on how long you let it defer, how long you let that growth go. But that's what I would do. Yeah, it's fun to have it in the market. It's fun to have the growth, but you need to stack some of your guarantees. I mean, how would it be to have 6 or 7 pensions paying you guaranteed? And then what if a year before you started to retire, or you're thinking about retiring, the market went down and you lost everything, but your annuities? Hey, that's what happened to Babe Ruth. He was living the dream, making tons of money, spending it, and he bought some annuities. Thank goodness he listened to his manager and he did it. And of course, when the stock market of 1929 crashed, he lost everything. But his income in today's dollars was like $380,000 guaranteed income. That's pretty awesome. I guarantee you he was super happy that he did that. Okay. And things were roaring. Okay. The 20s was huge. It was awesome. They were making tons of money. Okay. They weren't supposed to have a crash. And then it crashed in one day. Okay. We're going to have a crash again. It's not a matter of if, it's a matter of when. And the market's hitting new highs and it just keeps on going. There will be a time where we'll have a major correction, and it will be a while before it gets back. And so if you're at retirement, you're thinking about guarantees, you should probably give me a call. So anyways, all right, guys. Well, it's late. I really need to put my kids to bed and give them a kiss and get ready for tomorrow. So tomorrow I got a long day. But if you got questions, if you guys found value in this video, please reach out and let me know if you want me to talk about different topics. If there's different times during the day you want me to get on here, I'm happy to do that. Yeah, most of my videos, kind of polished, and I put them up and they're just for education, which is great. A lot of times people want to just reach out, they want to talk. Well, figured I would do these every now and then and see if that helps. So anyways, I hope it does. I hope that if you are looking for annuities, I hope you feel like you can trust me. I hope you can feel like you're going to get some transparency, because you are. I mean, that's what I like to do. I like to show what's going on. I like to show what the companies are doing, and I don't like to hold it back. There are agents, unfortunately, that will do that. And they know that there are other companies out there that are just as good, that are paying more, and they won't show it for a number of reasons. I mean, sometimes they're not allowed by their upper management, but most of the time, most of the time, they really like that company. They're used to that company. They're comfortable with them, and the company's paying them another 2 or 3% in commission if they sell more, which, in my opinion, is conflict of interest, and it's never anything you should do. So, but there are agents out there, unfortunately, that will do it, just like that agent that was illustrating to my client today of those 50 and 60% returns, which is absolutely ridiculous. Don't get me wrong, you can get some really big returns, and sometimes you could even possibly beat the market, but that is rare, and that is not something that you should illustrate every single year for 20 years, my opinion. So, all right. Well, you guys know how to find me. Go ahead and you'll notice at the bottom of each of my videos, there is a link to book a call in my calendar. If you don't find any times, just reach out to me anyways. You could still call. You could still go on my website, johnstevenson.com. And I got an annuity calculator. If you want to look at annuities, you can do that. I keep that's updated every single day. But you can also reach out to me. I've got a forum on there. And I usually respond the same day. So usually within the next couple hours, unless of course I'm skiing or in the mountains. Like today, I did hike in the mountains. We had super warm last couple days, and I decided to hike up Horse Thief Canyon because I love going up that 1,000-foot incline. Feels really good. Makes my heart pump. Makes me feel healthy, and just a nice place to think. So. Anyways, all right, guys. Thanks for watching. Appreciate it, and look forward to seeing you next time.